Welcome back to Yahoo Finance Live. Moderna plunging 18%, as you can see on your screen there, having its worst day since March of 2020. That was during the depth of the COVID sell-off. And it disappointed on Q3 earnings. It lowered, and it also gave guidance for 2022 vaccine sales, a little bit short of Wall Street expectations. Nevertheless, we're going to talk about it with Hartaj Singh, Oppenheimer Analyst. And Hartaj, thank you for being here today. I guess, big picture, there's a lot of competition in the vax space right now. Moderna guided for 17 billion in sales next year. I believe the street was expecting 20 billion. Should market participants really be surprised that maybe that there is a little bit more competition now and that there's going to be fewer sales for any individual firm?
Yeah, no, absolutely. I mean, I think that you've sort of hit the nail on the head, right? If you if you're a stock that's sort of driven by COVID-19 vaccine sales, like Moderna has been, then there's going to be a lot of focus there. And I think that there was some disappointment today. One of the big reasons we had gone to a neutral in July was we felt that Moderna could keep on executing, almost flawlessly, but there could be other factors outside their control. For example, like some of these manufacturing issues, they depend a little bit more on contract manufacturers than, for example, Pfizer does. And that's probably leading to some of their issues being able to make enough of their vaccines. And then the second thing that I think has surprised us, we don't cover Pfizer, is really how well that company has executed and gotten into the pole position for COVID-19 vaccine sales all over the world. I mean, we shouldn't be surprised because Pfizer is in 150 countries and Moderna is just now becoming a multinational company. But I think those two factors, one sort of expectations being way too high, and the other one, another competitor that's a larger, considered a more slow, so to speak, company doing better than expectations, I think led to the surprise today.
Yeah, I guess for people kind of reacting to that too, Hartaj, when it comes to where fair value is for a company that still has a lot of growth here. I mean, it may not be going as well as it could, and of course, Moderna, as we were saying earlier, doesn't necessarily have the same track record in being an established biotech company as long as some others out there have been. I mean, what do you look at in terms of how they can right the ship now and get back on track with what they want to do?
Look, I mean, it's really interesting because your question in some ways hits upon part of my job. When the company was almost hitting $500 a couple of months ago, we were being cautious, and as the company is sort of at the levels between 200 and 300 today, we're counseling patients and more optimism, and the reason is they're just different sides to the same coin, which is that, look, if you're planning on owning these shares for the next few months or a few quarters, then there is going to be a lot of volatility. There is still some flushing out that will probably happen. There's going to be more competition. There is still going to be focus on COVID-19. But if you have a longer term time horizon, 4 or 6 quarters or more, then you still own or could own, if you decide to buy, a company that was that's the only pure play, kind of mRNA company out there other than BioNTech, has got phenomenal science, got a deep bench expertise. So they've got a lot going for themselves, in the mid to long term. It's in the short term, really, where right now I think the tension is and where there could be volatility.
Well, and the Moderna story is pretty powerful here because this was literally their first product and they're not going to be a one-hit wonder. I'm just wondering what they have in the pipeline here and when we can expect that.
Yeah. So, look, and let's not give up on COVID-19 on them just because of one call. This is a company that sort of beat Pfizer all of last year. They had better data than Pfizer. They executed and were, able to deliver as much, if not more, than Pfizer in the first couple of months of this year in terms of vaccines. So I think based on one call, we should not be, kind of making them an also ran. And I'm not suggesting anyone is, but, the stock seems to be suggesting that. I think also, we have to remember that this is a company that's got almost, 25 plus projects in the clinic, 31 total. Again, they are going to have a huge moat around mRNA therapeutics for at least a few more years other than Pfizer and BioNTech. Part of that is just the science they've put into this over the last 10 years, which we got to know, during the IPO and after that. And then secondly, also just these same manufacturing shortfalls that they're facing manufacturing shortfalls other potential competitors could face over the next 2-3 years. So in fact, all this manufacturing sort of expertise that they're building and competency and the bandwidth is going to end up being a moat for competition for the next 2-3 years. So again, we still think there's still some flushing out to happen. We want to identify what those next projects are that could lead to the shares recovering. Cytomegalovirus vaccine, flu vaccine, et cetera. Those are moving along. We'll see data from those next year, hopefully. But I do think that stock action on today is probably a little over-warranted.
I mean, we've seen a lot of volatile moves off of earnings. It's tough to point to one that might have been this stark, particularly for a name that has been so far one of the favorites out there. But Hartaj Singh, Oppenheimer Analyst, appreciate you coming back on here to chat about Moderna. Be well. Got to have you back on soon.